Two traders take the exact same setup, same entry, same stop, same position size, same market. One of them gets stopped out, shrugs, and takes the next valid setup 20 minutes later with a clear head. The other gets stopped out and spends the rest of the day rattled, hesitant, second-guessing every chart they look at. Same loss, same dollar amount. So what's actually different between them? The easy answer is mental toughness, and then the conversation usually stops there, as if it's just a trait some people are born with and others aren't. But that's not what the research says. Psychologists who actually study performance under pressure have a much more specific, much more useful definition of what toughness is, and it turns out to be something you build, not something you either have or don't. Start with Jim Lohr, a performance psychologist who spent decades working with elite athletes and later executives and traders under exactly this kind of pressure. His central finding surprised a lot of people who expected toughness to be about grinding harder. Lohr found that the performers who held up best under repeated stress weren't the ones who could endure the most pressure without a break. They were the ones who recovered the most completely between bursts of it. He called this oscillation. Stress followed by real recovery, followed by stress again, and found that toughness wasn't a fixed reserve you drain down over a session. It behaves more like a muscle. The capacity to handle strain depends directly on whether you've actually let it recover since the last time you used it. Think about what a normal trading day actually looks like for most people. Screen open from the first alert to the last close, eyes on the chart through lunch, notifications through dinner. There's no recovery built in anywhere, just accumulating strain. Lohr's research would predict exactly what tends to happen by week 3 of a losing stretch. Not a sudden collapse, but a slow erosion, where smaller and smaller setbacks start producing bigger and bigger reactions because the recovery side of the cycle never happened. Lohr's work with elite performers found something specific about what actually counts as recovery, and it's stricter than most people assume. Scrolling through your phone between trades doesn't count. Watching another market while your first position is open doesn't count. Real recovery in Lohr's research meant a genuine disengagement, something that pulled attention completely away from the source of the stress, even for a short period. A 5-minute walk with your phone in another room did more for his athlete's next performance than an hour of passive distraction sitting in the same chair. The body and the nervous system don't register still near the source of the stress as rest, no matter how it feels in the moment. That distinction matters enormously for how most traders actually spend their day. Sitting at the same desk, flipping to a different chart, or checking a different asset during a lull isn't recovery in Lohr's sense, it's just redirected strain. The stress response doesn't reset, it just finds a new target to attach to, which is part of why a trader can feel simultaneously resting and completely wired by the end of a session. Isn't it strange that we treat rest as the opposite of discipline in trading, when the research says it might be one of the actual ingredients of it? If this is giving you a different way to think about your own sessions, this is a good point to hit like and subscribe, because the next piece of research explains something even stranger: why skilled traders sometimes fail at exactly the moments that matter most on trades they'd normally take without a second thought. That question is where Cyan Beilock's work comes in. Beilock studies what's often called choking under pressure, and her research reveals something counterintuitive about skilled performance. You'd assume that trying harder and concentrating more intensely would help you perform better in a high-stakes moment. Beilock found the opposite happens to well-learned skills. Once an action is practiced enough to become automatic, consciously monitoring every step of it, second-guessing each movement, actually interferes with the smooth execution that made you good at it in the first place. She calls this explicit monitoring, and in her studies, experienced performers who were told to pay close attention to a skill they'd already mastered performed measurably worse than when they were allowed to just do it. Does that sound like anything you've experienced staring at a big position? A trader who's taken the same kind of setup 100 times suddenly starts hovering over the mouse, replaying every tick, consciously narrating their own decision instead of just executing it the way they normally would. Bylock's research says that hesitation isn't a sign the trader forgot how to trade. It's a sign the size of the moment pushed them into explicitly monitoring a skill that used to run on autopilot. And that extra layer of conscious attention is exactly what broke it. Bylock's lab demonstrated this with a deceptively simple golf putting experiment. Skilled golfers putted more accurately when they were distracted by a secondary task, one that kept their conscious mind busy and out of the way, than when they were told to consciously focus on their stroke mechanics. The instruction to concentrate actively hurt performance in people who already knew how to putt well. Novices showed the opposite pattern. They needed the conscious attention because they hadn't automated the skill yet. The lesson isn't that focus is bad, it's that focus helps you while you're still learning a skill and actively sabotages you once you've already learned it well enough that your body knows what to do without narration. That's an uncomfortable finding for anyone who's been told for years that the fix for a bad trading session is simply to focus harder or lock in. For a trader who has already logged the reps, who has already taken that setup correctly 100 times before, telling yourself to concentrate harder in the moment isn't reinforcing the skill, it's actively pulling you out of the automatic execution that made you good at it and shoving you back into the clumsy, self-conscious version of yourself that existed before you'd practiced it at all. Here's the counterintuitive part, and it cuts against almost everything traders are told about discipline. The fix isn't concentrating harder in the moment. Based on Bylock's findings, that's precisely what makes performance worse under real pressure. The fix is building enough practiced automaticity beforehand that your execution doesn't need conscious monitoring to hold up, combined with Lohr's insight that the automaticity itself only survives if you're not chronically depleted going into the moment that tests it. Toughness, in other words, isn't willing yourself to concentrate harder when it counts. It's making sure that by the time it counts, you don't have to. This shows up everywhere outside of trading too, which makes it easier to see clearly. A golfer who three-putts on the final hole of a tournament isn't missing a stroke they've never made before. They're missing a stroke they've made 1,000 times, except now they're thinking about the mechanics instead of trusting them. A musician who nails a piece in rehearsal and freezes in the actual audition is running into the exact same explicit monitoring effect Bylock documented in her lab. A free throw shooter who's automatic in practice and shaky at the line in a packed arena is the same story again with a different backdrop. The stage is different, the mechanism is identical, and none of them are examples of someone who simply wanted it less in the moment it counted. So what does building real mental toughness actually look like for a trader, instead of just being a phrase people repeat? It looks like treating recovery as part of the job, not a reward for finishing it. Closing the charts fully between sessions instead of leaving the tab open all evening. It looks like drilling a setup in smaller size or in a simulator until the execution genuinely doesn't require conscious thought, so that when it's finally your full position size on the line, you're retrieving a well-worn habit instead of improvising a decision from scratch. And it looks like trusting that setup once it's built, rather than trying to white-knuckle extra focus into exactly the moment your account is most on the line, since Bylock's research says that's precisely the moment extra conscious focus does the most damage. Go back to those two traders from the start. The one who shrugged off the stop-out and moved on wasn't tougher in some abstract, permanent sense. They'd more likely built in real recovery between sessions and trusted a setup they'd run enough times that it didn't need conscious effort to execute under pressure. The other trader wasn't weaker. They were probably running on a deficit they hadn't noticed yet, forced to consciously will their way through a moment that should have run on autopilot. If this changed how you think about what toughness actually is, tell us in the comments whether you build real recovery into your trading routine, or whether your charts are open the second you wake up until the second you sleep. Hit like and subscribe for more of this. Thanks for watching.